All right, welcome back, mates. Crypto Leverage Trading Group. Hope everybody is doing well. We are going to talk a little bit about something that's been coming up recently a lot because of alt season. You're hearing a lot more reference, for the most part on YouTube, but you can, and on Twitter and social media, but you can also pick up a lot of it in the business media, and that is Bitcoin dominance. And whether or not you believe in this ratio, and whether or not the street believes, a lot of times as leverage traders or just spot traders, you sometimes have to subscribe to this industry-wide or sector-wide like acceptance of things because these narratives move the market one way or the other, whether or not you really subscribe to them or not. And I've always been kind of on the fence about Bitcoin dominance. It just depends on where your background's at, especially if you're new to the cryptoverse, if you're new to cryptocurrency and altcoins and stuff. It's just, to me, it's so 2015, 13, 15, maybe even 17, but it's just not even remotely anymore valid, in my opinion. And I may be in the minority of people who have this opinion because we have so many more metrics now that actually gauge things like altcoins, specifically altcoins, right? What happens on exchange flows, right? In and out of the money metrics, addresses, blockchain, right? We have all this stuff, that is really just more productive, and more insightful that we didn't have 5 years ago. And in truth, we really didn't. And so Bitcoin dominance became this thing where, it basically was Bitcoin and everything else, and how everything else related to Bitcoin, right? Or how Bitcoin was relating to the rest of the cryptoverse in terms of market cap, circulating supply, market cap, market value, all of those multiples and all those things that, we determine. And we were all always led to believe. I mean, I remember 5-6 years ago, it was like, if Bitcoin dominance was like 70, 80, 90%, right, of the overall crypto market. And that's what we're talking about. We talk about dominance, right? Because first mover Bitcoin, right? And everything else came after, right? You see this a lot in technology spaces too, or, you could even factor it into any kind of industry where there's rankings within an industry, right? We know Bitcoin in terms of market cap, it's the top dog. It's always been the top dog. Will it forever be the top dog? We don't know. I mean, we don't know what the future holds, right? And this is the part where you start to get a divergence really now when you're a decade plus in to the historical nature of the cryptoverse, right? Because at the end of the day, the ratios are all tied to market cap, circulating supplies, right? Market value, right? These are all the things, all the formulas that you use to calculate all this data that determines, who's moving, who's not moving, who's better, who's not. But whatever narratives you want to buy into, it's great for YouTube and it's great for clickbait. It's great for whatever. But the reality of it is when you're talking about circulating supplies, at some point, doesn't it end? And then when it ends, what happens, right? If, in the beginning, when we talk about what's happened to Bitcoin, how many times has Bitcoin forked? Whether we agree or disagree about Bitcoin Cash, right? Whether we agree or disagree, about all the different, forkings, right? What's that impact on dominance, right? What's the impact of having every 4 years on dominance, right? What do we do with that? Because all the altcoins aren't having, right? Well, last time I checked, Cardano hasn't halved, right? So what do you do with that? Wait, we're having every 4 years. Because we have within the parameters of the white paper and the parameters of certain coins that capping circulating supplies, capping things. How do you kind of rationalize all of that and try to apply it to 5,000 altcoins in what we call altcoin season. When traditionally during altcoin season, altcoins are supposed to eat in to the market cap, really, dominance of Bitcoin. But how does that happen? And then when altcoins have continued to rise since the summer of 2020, right? The DeFi boom, we had a little dip, and now we've been carrying back up for almost all of 2021, regardless of what metric you look at, regardless of the 10% corrections we've seen in Bitcoin, altcoins, are doing what they're doing and will continue to do so. And as Bitcoin climbs, aren't the altcoins just going to go right along with it? And if that's the reality, and if you look at it, staying in that 60 to 70 dominant range, it's irrelevant. It's meaningless. And it has no bearing anymore on the market. It has stayed roughly in that 60 to 70 range for literally like the last, 3 years, like dominantly 80% of the time, 90% of the time. Now it's fallen precipitously because we've had these sell downs of 20-25% temporarily, and then all of a sudden we get a retracement. Altcoins going to go, like earlier this week, prime example. DeFi altcoins kind of mooned up for like 24 hours, right? And so that shrinks it, right? Oh, here comes altcoin season's here, right? Clickbait, altcoin season, social media, YouTube, altcoin season. And then what do we get now? What did we get last night? Right? Bitcoin went down, altcoins went down. So how do you, you have to ask yourself, you're just straight off new, less than a year, 6 months, 3 months, 2 months into cryptocurrency. How are you supposed to rationalize that when people are telling you that it's a indicator or a, dominant thing, that if Bitcoin loses dominance, that tells us that altcoins are creating greater dominance over Bitcoin in a sense, right? The lower the dominance number falls, Bitcoins must be rising because it's a relationship between the market cap of Bitcoin and the overall cryptoverse. But yet we're not seeing that. Regardless of what the ratio really is, leverage traders aren't seeing that. The average spot traders aren't seeing that. We just witnessed last night, okay, Bitcoin fall below 50,000. It's gone from 63,000, tested 54, back to 56, 57, tested 52, back to 56, tested 52, back to 56, 57, tested 52, fell below 40, 52, on its way to below for 48 on a wick, where that critical support level is for Bitcoin. Meanwhile, dominance is falling precipitously all the way. But here's the problem is last night, altcoins didn't rise. Altcoins fell twice in some instances what Bitcoin did. And some haven't recovered today. So there's your invalidation of really the validity of Bitcoin dominance, right? Bitcoin has come down from 63,000 to 48,000, right? Trading now to roughly around 50,000 today. But the altcoins didn't move. The altcoins didn't go, oh, it's now altcoin season. It's now, that's where we're looking at, right? And regardless of whatever YouTube channel you watch, or it's all like, Bitcoin dominance. Bitcoin dominance is going to trigger altcoin season. No, alts are going to trigger altcoin season. Independent of Bitcoin. Independent of Bitcoin. And here's why. For the most part, for 90% of the history of Bitcoin dominance, there was no fundamental adoption, acceptance of more than about 4 or 5 altcoins. And that's just the truth, okay? And you got all these people now coming into the crypto space from computer science, computer engineering, entrepreneurials, you name it, okay, that are now projects, getting on the blockchain, creating solutions from, dozens of colleges and universities all over the country and the world, okay, that are developing solutions for the blockchain, okay? So you have thousands and thousands of projects, altcoins, tokens, stable coin, you name it, right? Okay. But fundamentally, think 5 years ago. What was everybody talking about 5 years ago? Okay. We had Bitcoin, Litecoin, okay, and the beginnings of more or less Ethereum, right? And then some of the other projects obviously came along, okay? So that relationship between Bitcoin and those half a dozen altcoins made sense in terms of Bitcoin dominance. But does it make sense today? I don't think it does. I think it's a driver, and you have to pay attention to it because the narrative is so set. Everyone's so grasping at acceptance for trying to rationalize things that don't happen. And these aren't people that are getting into the metrics. They're not getting into the data. They're not looking at all of the mathematical equations. They're not looking at all the technicals. They're just basically out there, oh, well, Bitcoin dominance, or, oh, well, altcoin season, that carry this like heavy weight of somehow meaning something. But they're completely unrelated now, in truth. You can make them related. It's like everything else. You can go and point to a whole bunch of things to justify whatever you want to justify. And I can come over here and point to a whole bunch of things to justify that you're wrong, right? Or that you're right, right? And this is just how it is every argument that we get into in terms of these things. But last night should have showed you, okay? I wrote a bunch of these down. And it's shocking. Because if you went on YouTube yesterday, and you just listened to what was happening on YouTube, you thought we were in the middle of a rally in altcoins. I mean, just do a back search on YouTube if you want, or some of your major YouTube channels, right? And was a rally, altcoin season rally. It was a rally, right? Crypto or us, no, a rally. Okay, doesn't matter what, and then 8 hours later, boom, right? So what was it? Was it tax hikes? Oh, the worry of tax hikes. I don't know where you are in the world, but I'm smack dab right in the middle. Most people know in the Crypto Lovers Trading Group where I'm smack dab in the middle of the political universe of the world in terms of in the United States. And you had to have been brain dead for the last year if you didn't think taxes were going up with the new crew in town. Okay, regardless of what party, regardless of what politics, regardless of, around the world, whether people like Trump or doesn't like Trump or whatever that is, it doesn't really matter. The reality of it is the guy told you what he was going to do. That party told you what they were going to do. They were going to pass, in essence, $4 trillion worth of debt. They told you, and people voted for it. God bless everybody in the United States. They went to the polls and voted. I mean, they voted. Okay, it's democracy. They voted. So, no complaints, right? That's democracy in its truest sense. So more people, 73 million people in the United States voted for the guy that told them he was going to increase their taxes. He was going to increase the capital gains tax. He was going to hike income taxes. He told them that, and 73 million versus 70 million voted for the guy. And the guy won. That's the reality. This isn't new. Who didn't see this coming? I don't understand. Whether I'm just, my demographic, I'm older and I just kind of listen and pay attention to these things and kind of like, do my own due diligence in politics like I do like in cryptocurrency. But I don't understand how this is a surprise to a bunch of 30-year-olds on YouTube. That, oh my God, Joe Biden is going to come after our crypto earnings. That Joe Biden is going to tax crypto. Of course he's going to tax cryptocurrency. Like, what? How is that a shock to anybody? When has any government on the planet not come after growth, not want to tax growth? What's happening right now? Cryptocurrency is kicking the living shit out of stocks and equities and bonds all over the globe. Okay? This is why you have countries that want to control their currency, okay? That want to control their people, okay? As best they can, keep them under a boot, so to speak, are banning Bitcoin, crypto, okay? Turkey, example, right? Like, This is why. This is why. Okay, so it should be a shock to people that, though, somehow another flash crash. How many flash crashes are we going to have, by the way, that everything's characterized as a flash crash, right? Like, because of tax hikes. That's just stupidity to me. And it's like anybody who is, paying attention knew this was coming. On the one hand, when they told us a month and a half ago that through Congress, they're going to pass a $1.9 trillion stimulus. So everybody takes the money, right? These people on YouTube taking the money, and then what? Don't expect the government to have to figure out a way how to pay for it. And a very good way for them to come at people right now is, where are people making a lot of capital gains? In crypto. It shouldn't shock anybody. Did that cause the crash last night? No. I mean, it's ridiculous. You think whales give two shits about Joe Biden's proposed tax hike? Like, they're making millions. So instead of paying 10%, the 19% or whatever under Trump, they're going to be paying 30%. So they're going to be paying 10% more in capital gains taxes on $100 million. Okay, that's a lot of money to you and me. To them, that's not a lot of money. Okay, it's just the cost of doing business. And are you going to sell all your Did you sell all your Bitcoin last night because Joe Biden's going to raise taxes on your earnings? Here's what I want to leave you with in terms of that, okay, mentality. We don't quit our jobs because our employer or the government takes out income taxes, or our employer has to pay payroll taxes, right? We don't quit our job over income taxes because the government takes it out of our check. If in the United States, you got the two lines, two different, deductions from your hourly rate times your hours, and all that happens, gets taken out. The government takes it, and hopefully you get it back when you file your taxes, right? We don't quit our jobs. We don't stop working, right? Because the government is, quote unquote, taxing us, right? So why would you sell your Bitcoin because the government's going to tax you at a higher rate for your earnings? Where are you going to go to get the rate of return that you're going to get in cryptocurrency? Even after taxes. Where are you going to go? You going to go back to stock market? You going to go back to bond market? Where are you going to go? Right? So it's just asinine and stupidity. It's people that have zero idea of finance and what they're even remotely talking about, like in terms of these things, that they just want to like immediately go and protect their content. Like, I've got to provide my subscribers with the blame and a reason why this just happened. It's got to be the tax hikes. No. It's got to be Bitcoin dominance. No. These are normal corrections that happen in a bull market cycle. Okay? They get compounded because there's another metric that is very, very important, and that's the social media metric and how it relates to the number of views and clicks and sites and activity on social media as it relates to Bitcoin and Ethereum. Did you know that Ethereum saw a massive spike in social media interest? Now that's Twitter, YouTube, Facebook, Instagram, Reddit, you name it, okay? Social media approaching $2,600. And we know as a metric, if you track the social media metric, when you see that kind of exuberance, a spike, what follows? Boom, a decline. Where are we at now with Ethereum? All the way back down to 2,200, rebuilding another consolidation phase. Likely will test 2,500 in the next 3 to 5 days. That's my take, okay? Because this is what happens, okay? You look at the addresses. We haven't had a chance yet, but we're going to get onto it hopefully this weekend. I've done a couple calls and individual Zooms with a lot of some members in the group, kind of keeping them small in groups of like 3 or 5, because everybody has a lot of questions about stuff. And really the biggest opportunity for everybody that I've noticed in my group that is going to help them become better traders is on-chain metrics and all of the different on-chain metrics that they can follow. And that's really what YouTube should be talking about not Bitcoin dominance. Okay. But I got a list here, and I'm going to show you this. Last night, I was sitting there and I was watching this, and I was getting inundated with a lot of texts, a lot of messages from the Facebook group, a lot of messages from the Discord. That Discord, by the way, is a free trading community Discord. There's a wealth of information there. There's really great people in that group that are willing to help you. Doesn't matter if you're a beginner and know zero about leverage or cryptocurrency. If you're into altcoins and just trading techniques and methods, it's a group you want to be in a Discord. Again, it's free. And so, I mean, not join. Hey, free is free. And now I was looking at it. I was like, oh my, and people were like giving me like, hey, did you see, VeChain is off 50%. I'm like, what? Like, boom, on it. Like, you know what I mean? Like that kind of stuff coming in, that kind of dialogue, excitement, right? This is different than hands getting shaken out. Okay. Because the true Bitcoiner, and this is just a fact, that everybody in the crypto leverage trading group and anybody in the cryptoverse or anybody new to cryptocurrency needs to understand. A true Bitcoiner loves the dip. They love it. I love the dip. Okay. Last night, Ethereum, loved it. Why pay $2,600 when I can pay $2,200? Everybody likes a sale, right? Okay. Now that's the way you've got to look at it. Remember, you are DCAing. If you're in spot trading, you should be, and you're buying low, selling high. And the problem is people buy high and sell low. And I just looked at it this morning. Okay. And you're being played and you're being manipulated. And it's not just the government. It's not just the government. Okay. There are people on YouTube that do not care about your wallet. They do not care about your percentage P&L. They don't. They care about your subscription and the length and amount of time you watch their videos because it's monetized for them. That's the reality. You've got to accept that. But subscribe to them. But understand that that's where it's coming from. You've got to understand where the head at is in a content provider. And so that's where that's coming from for you. But you've got to be able to take a step back, have a wall up and be like, okay, information. I'll take a little bit of that. I'll consider that in my trading. Meanwhile, they're buying the dip because the true Bitcoiner, okay, is buying the dip because they've always known they've got a long-term vision, okay, adoption and acceptance. We're not there yet. We're only like that much, okay, this much institutionally, okay, adoption for Bitcoin and Ethereum, even less for Ethereum, okay. Coinbase, that's a big launch pad for institutions. We've talked about that before in previous videos for Coinbase custody. Okay. But it's not that they want to, it's not that their intent is to shake you out. That's not their intent. They're going to cover it like media, but they're buying these dips and adding to their bags and their stacks. Okay. Long institutions just got done doing that this morning. Expect there to be some announcements coming. Okay. Again, on-chain, get into the blockchain, look at addresses. You can pull up on on-chain, okay, depending on what service you belong to. You can pull up the addresses, okay. How long did they hold Ethereum? How long did they hold Bitcoin before they just dumped? Address that holds 10,000 to 100,000. The graph, okay. Uniswap, right? Did they sell? What about the 100,000 to 1 million coins? Oh, they sold. Look at the number of addresses. So at the beginning of Q1, we say this is for example's sake. Beginning of Q1, we had 300 addresses of X, altcoin X, with 100,000 to 1 million altcoins, tokens. At the beginning of Q1, okay, that would be January 1st. Now, second quarter of the year, we're down to 205, 195, right? So you see 95 addresses to 100 addresses holding 100,000 to 1 million tokens of CoinX sold. And you go back and you look at, okay, 10,000 to 100,000, less than 10,000, less than 5, less than 1, less than 1,000, less than 100, right? And you look, who was selling? You get a big gap. Okay, I can tell you this almost in every single altcoin that I've looked at. You got a gap between the whales selling and then the short-term hodlers holding that X coin, that altcoin for less than 30 days or maybe 60 days, under 100 tokens selling because they got shaken out. Okay. Now, where do those tokens go? And what impact does that have on Bitcoin dominance? Well, it fuels it, right? If it's all altcoins, if all these altcoins are getting sold, right, then Bitcoin's dominance over the market should be higher, right? It should rise because the altcoin valuations are going to decline because everyone's getting shaken out. But the problem is Bitcoin holders get shaken out, altcoin holders get shaken out at the same time, and nothing changes. That's why Bitcoin dominance is irrelevant. That's why it's the big lie. It just is. It's just not. Okay? And so looking at last night after midnight, because I always look at anyone who knows me knows I put a lot of stock in that last 4-hour candle, okay, of every day. And this was at midnight last night, Eastern Standard Time. And I'm just going to read through some of these altcoins. And when you just think about everything that you've heard, everything you've been seeing on YouTube, at other YouTube channels, God bless them, everybody on YouTube, hello. I appreciate everybody in YouTube. It takes the time to do what they do. Regardless, I may agree with some, disagree with others, but I still have a lot of respect because I know how much time it takes, to even run a small YouTube channel. And I appreciate everyone who subscribed to my YouTube channel, and I appreciate being small because I can't imagine how much work and commitment it must take for people that have thousands, let alone hundreds of thousands of YouTube subscribers, in terms of being there, supportive, and providing content. But after midnight last night, Eastern Standard Time, Cardano, 24-hour period, okay? Cardano, minus 19%. Polkadot, minus 17%. Chainlink, minus 14%. VeChain, 33%. Stellar, 10%. Theta, 15%. EOS, 25%. Maker, 16%. Engine, 27%. Synthetics, 15%. Chili's, 24%. Comp, 12%. Elrond, 19%. Monero, 16%. Avalanche, 19%. Okay? What does this tell you? Dogecoin, 32%. That's a broad spectrum of the altverse. It's not just DeFi. It's not just NFTs. Okay? Not just stable coins. That is a broad spectrum of the cryptoverse and the altverse in particular. They all got pummeled. Bitcoin went down below 50,000. They got pummeled. So what does this tell us about Bitcoin dominance? Well, let's look. I want to kind of go through this little thing here really quickly. Let me pull this up real quick. So you kind of get an idea of, really what we're talking about when we talk about Bitcoin dominance. And this kind of explains it. I'm going to put this link too. If you're in the crypto lover trading group, I will put this link in the free trading Discord. So you can come back and review this. But uses, okay, practical uses now. Go back 5 years. Do these things still apply today? When Bitcoin dominance became a thing, okay? That thing that people can't detach from, okay? That shiny little gold object, that gold little coin of Bitcoin okay? Even in the midst of Bitcoin killers, launch of Ethereum killers with Cardano, even in all that, people still want to use Bitcoin dominance, okay? So when you look at this, you will see uses for Bitcoin dominance index, okay? Traders can use the Bitcoin dominant index to gain insight into the market and more specifically the sentiment of traders. So if the Bitcoin dominance index goes down, what does that tell us traders? What's it supposed to tell us traders? Isn't it supposed to tell us that if Bitcoin begins to decline, that altcoins are supposed to go up and therefore blooming, altcoin bloom, otherwise known as altcoin season, hence springtime flowers, okay, fall, altcoins tend to decline. That's what's supposed to happen, right? Has it happened? And we're watching Bitcoin drop 13,000 basis points in a week or less, 25%. Again, we've had these corrections before over the history of Bitcoin, so this isn't new. It's why I'm not shocked. It's why I'm not freaking out. It's why I'm not panicking. It's not why I'm like, sending up the smoke signal, smokestacks to everybody to dump all their crypto, because this is what Bitcoin does. Historically, if you look at the charts and you factor in post-halving periods, every quarter post a halving. The last halving was May of 2020, okay? After the March, massive dump correction, called the COVID crash, right? Bitcoin halved. Each quarter subsequently after that halving has a direct correlation of history to it before, to the halvings before it, okay? Go on Twitter, go to Chart BTC, follow that individual on Twitter. I encourage you. It's all about Bitcoin halving. It's all about Bitcoin halving metrics. It's all about what is Bitcoin's behavior each quarter, each month post halving, and what's coming down the road this fall in September. Okay. And we'll talk about that in another video. But if history repeats itself, that's really where there could be some serious issues facing Bitcoin, depending upon where it is at the time. Okay. The price of any asset is a function of supply and demand. We get that. So the index effectively measures the demand for Bitcoin relative to the demand for altcoins. Let me read that again. The Bitcoin dominance index effectively measures the demand for Bitcoin relative to the demand for altcoins. Well, where was the demand last night? Right? Let's wait for the answer. Okay? Coming from some mystical crypto gods out there to tell us, where was the demand last night? There was no demand for any crypto last night. This is why Bitcoin dominance is irrelevant now. And it's just something that's kind of there for people to cling to, to try to explain what they don't want to take the time to actually dig down and deep and do the research to actually explain what's happening on the blockchain in the addresses, what's happening with mining, what's happening with hash rates, what's happening geocentrically, what's happening politically, what's happening, okay? That may have caused whatever the issue may be. We can easily find the technical and follow the technical because it's rear view, right? Like boom, So traders could also use the index to infer the market's risk aversion. Where was the risk last night? Everywhere, right? Everywhere. I just read you over a dozen altcoins, 15 to 25% taken out. Why? Because Bitcoin declined, fell below a critical level of 52,000, tested another very critical level of 48,000. Okay. So people, that's the panic, because they've set that barometer, right? You have to think about that. The technical traders, coupled with YouTube content providers, coupled with set an expectation. And when that expectation is not met or that expectation is broken, you get the panic selling. It's a inverse reaction, really, to what they've set up. They've set you up, okay, and you've reacted. Completely normal. It's no malice, not nefarious, because that's technicals are showing, and that everybody knew it. In my group, 52-48, I've said it for months and months and months. Okay. And 60. Okay. And so getting above 60, breaking that resistance level, the very proactive traders and educated traders, people that have been working with me for quite some time, either one-on-one or just in the group, that have kind of followed my mindset of how I perceive the markets, knew that we broke that resistance level. There's only two options that you have, okay, as a leverage trader. One, you've broken a resistance level, new price discovery, okay? New price discovery doesn't last forever, mates, okay? So once you see that indication of the RSI eclipsing at this point during new price discovery 95, and I will teach you that if you subscribe and join our group, and you're going to enter in the leverage trading course, you'll see what I'm talking about. 95 on that kind of new price discovery. Doesn't matter if it's Ethereum, doesn't matter if it's Bitcoin, doesn't matter if it's Litecoin, doesn't matter if it's a new offering issue, okay? You get to 95 on your short-term candle, you get out. And you may not hit the top. You may not have called the top exactly. So what? So what? If your P&L percentage is 50, 60, 70, 80, 100%, 300%, so what? Stop trying to call the top. Stop trying to call the bottom, okay? Again, be smart about it. You knew 60,000 and we knew 52,000. Using Bitcoin dominance, okay, the way that they have set it up for leverage traders is at 60,000, Bitcoin becomes more dominant because its value is far exceeding altcoins are not coming and trailing with it in tandem as quickly, right? So it should be more dominant. It should be higher in that 60, maybe 70 range, right? If it's falling to 52 to 48, it should be lower in that 60 range or possibly fall into the 50 range, right? As we see now. So as a leverage trader, you've set your parameter, 52 and 60. So your options as a trader are new price discovery, peg RSI 95, get out before everybody starts selling. Option one. Option two is straddle the trade, okay? Meaning, you, again, far on the upside, far riskier in a sense, because you are taking more risk of, exposure because you're not closing out your up open entry. Okay, so you're keeping that open, but then you're buying a sell down, okay, at that 90 to 95 RSI level. You enter in a sell down at 5x, 10x, whatever you feel comfortable with in terms of your leverage exposure. I know plenty of traders, and I've done it, simply use 1x on the sell downs, okay, to have a little bit of protection off of any kind of quick correction or whiplash back. The reverse of that is true at 52,000. When Bitcoin dominance fall, because its price is falling, its dominance should be falling. Altcoins dominance should be rising, right? That's what they tell us technically. So at 52, you do the opposite. As soon as the 52,000 level was broken this week, you buy your sell down leverage calls. Just like option traders. Sell it short. It's broken resistance, okay? You can keep your long open because you're confident long-term in the next 30 days or 60 days, depending on, or if you're buying options, derivatives markets. If you look at them, they're all at 70, 870, 75, 80. So there's a lot of long interest right now for Bitcoin to be in the 70s, okay, going forward June and outward, right? So you do the reverse. So you buy it, you keep a hedge open, straddle. A straddle is you have simultaneously an up and a down, a long or short trade simultaneously in the same asset at the same time, okay? So at 52,000, you may have closed out your long, okay, earlier, but at 52,000, you're like, okay, this is a critical support level. I'm going to go ahead and re-enter, say 5x up at 52,000, and I'm going to enter a 52,000 5x down. And you hedge that support line. Now we know Bitcoin fell to 48. So that 5x leverage trade at 48 okay, is $4,000 in the money. And you still have your open 52 5x up entry, right? You sell that, okay? You exit your down trade. Once the level bottom, once we see that 48,000 level held support like it did, right? It did get a little bit lower on the wick, but at 48,000, that kind of critical level held support. You get out of your short trade. You flip it. You take your profit from that short trade, okay? Or however much you need or designate, depending on what your exposure was in that trade. You buy down your long. So if you average down your long from 52 from 48, say it's at 5x, 5x, you're at 50,000. Well, guess where we are right now, mates? 50,000. Okay? There you have it. 24 hours. In that scenario, you played the swing down, swing up, average down, you're long now. So now you're sitting with just a long Bitcoin from 50 to likely test 52 again, because as we know in our group, former support becomes future resistance. Same as on the blockchain for on-chain metrics in terms of accumulation. Remember, it's supply and demand barriers. Okay. And how that relates to Bitcoin dominance for leverage traders. You can use their, that ratio that's falling as a good indication to go ahead and enter a sell down, a short trade. That works. That's fine. Because it's sentiment in the market, and so much of the market buys into that dominance factor that oftentimes you get the behavior. And so you just want to fill that in. So it says here at some points in terms of Bitcoin dominance, Bitcoin has functioned as a safe haven asset. We know that, obviously, store of value, serving as a store of value during macroeconomic turmoil. Okay, well, there was a lot of turmoil last night. Bitcoin was not a store of value last night. Let's just make that understandable. Long term, yes. Short term, no. If the value of altcoins starts plunging and Bitcoin does a far better job of holding its value, one can interpret this as meaning that investors are buying up Bitcoin in a flight of safety. And we cover this, and what I'm reading to you is we're covering this from the leverage trading course. That is the sentiment. That if you're selling Bitcoin and you're a Bitcoiner, that you're buying altcoins. Doesn't really correlate on the on-chain metrics anymore. It did more 3 years ago, 4 years ago, 5 years ago, when we were talking about a narrow pool of altcoins. Okay. But in today's, it doesn't really correlate, and plus we're also talking about thousands now of options for altcoins, right? And we're also talking about the fact that, which it doesn't factor, we talked about the forks and how they kind of like weird. You have aged addresses. And for those of you who don't, aged addresses are just say you were a Bitcoin buyer in 2014, 13, and you haven't bought any more Bitcoin since. It's stored somewhere, right? Cold storage. The reason why it's cold storage is because we all know that in order to create energy, there needs to be movement, right? Cold storage, there's no movement. It's an aged address. They're not factored in to Bitcoin dominance. So again, it's, for lack of a better word, it's funny crypto, right? Kind of made up. Like, it's tied to actual things. Yeah. But not everything. It's not 100% each, data point for this ratio. It's not 100%. And that's why a lot of people are moving into my direction that reject it as being relevant. Useful? Okay. I just showed a use case for it, how you can, but it's not as relevant as it was 5 years ago. So it says investors can also use it to get a better idea of a digital currency's market value. Okay. However, market cap has its limitations when used in this way. This is what I'm getting at. Okay. Much of Bitcoin lies dormant. Okay. as it has been abandoned or sits in wallets that cannot be accessed. Forgotten coin. I can't tell you how many times, I could not tell you how many times, not with Bitcoin, but how many times people have said to me or posted in our Discord randomly how like, I had totally forgotten that I bought that coin. Totally forgot that I bought that altcoin a year ago, 2 years ago, 3 years ago, whatever. And then they find it because people have multiple wallets, people have MetaMask, people have, whatever it is. And it just happens. And so Bitcoin Dominance Index is a metric that investors can use to get a quick sense of Bitcoin's value relative to a broader digital currency market. That's really it. And that's all it really is, mates. That is all it really is. It doesn't really have, it has the meaning in the sense that it is triggering behavior in people because content providers are using it somehow as the crypto pill to explain what's going on in the cryptoverse now. And it's not anymore because of the growth of cryptocurrencies, because of the expansive nature of the altcoin market these behavior, they're acting independently of Bitcoin now. Ethereum runs up to 2,600. Bitcoin's hovering and doing nothing with low volume, and Ethereum is mooning to 2,600. It's Aave, moon, Maker, moved, Compound, mooned, right? Independent. Bitcoin wasn't doing anything. There was no difference from the day before, the day after. Bitcoin was just doing what its thing, 54,000, like it always does. But for some reason, these altcoins are acting independently of Bitcoin dominance. Why? Again, who is now accumulating altcoins? Whales, addresses, institutions, Coinbase custody. They are buying up supply. They are buying up your Bitcoin and your altcoins that they have shaken you out from under. They're not just sitting out there, waiting, right? Bitcoin's just not sitting out there. Look at the exchanges. Look at how much Ethereum and how much Bitcoin is actually on these exchanges now, mates, compared to 2 years ago. Okay? Supply becomes an issue. It's just a matter of time. And you're going to get these shakeouts when the supply begins to condense, because this is how they get supply artificially increased for them to come in and buy more Bitcoin or Ethereum or any of your major altcoins you can think of. People don't talk about it, but that is what's happening. Okay. So I'm not a believer, obviously, that Bitcoin dominance is dominant anymore. And I'm willing to take, the blowback or whatever, or go on anybody else's channel and have this conversation, because reality, you just saw last night. Look at the top 100 market cap or altcoins, 24-hour period ending midnight last night. 1 day period ending midnight last night. And I will guarantee you that the average of that 100 is roughly 8 to 11% decline, right along with Bitcoin and Ethereum yesterday. So how does that correlate? Bitcoin dominance, altcoin season. How does it correlate? It doesn't. And that's what you need to know. It's apples and oranges now, mates. And you need to understand that. Your altcoin is your altcoin. Your project, okay? If you're a believer in a project, we'll take Cardano, Avalanche, Polkadot, Chainlink. They're all great, okay? It's all serving different purposes. Uniswap. They're going to sink or swim on their community and their broad acceptance and adoption for the solution that they offer, ultimately. You got last night, there's your opportunity. Cardano fell below $1. First time it's been below $1 since I want to think early February. I know Bitcoin Crypto said it would never be below $1 again, but I don't think Ben Armstrong anticipated what we saw last night, in fairness to him. But fell below $1. Okay. XRP fell back below $1. VeChain off 50%. Right? Engine coins off 50%. What really changed with the future potential of those projects relative to Bitcoin dominance, right? And we saw that with Ethereum going into yesterday. Ethereum moved from like 2,300 to 2,600, set an all-time high. And then all of a sudden the Bitcoin stuff happened. And then everything, Litecoin, Bitcoin, you know, Ethereum, XRP, EOS, Chainlink, Cardano, Polkadot, everything fell out. All right. So that's a quick update. As we're talking about Bitcoin dominance. If you have any questions about Bitcoin dominance and how you can implement it and use it to the best of your ability, no matter how small, but it still has some value for leverage trading, be more than willing to discuss that with you one-on-one. We can talk about it in the Discord or on a call. Just let me know. And again, like and subscribe to the channel. Please join our free trading Discord. We got a leverage course coming out. I'm really excited. In terms of the freemium status, we'll still keep the current Discord available and up and running, which will always remain free. And then we'll have premium leverage course Discord for those people that are part of the subscriber base, part of the mentoring and tandem trading element, where we'll trade together, coach, mentor each other together, have Q&As together, have all these things, be able to diagnose these things like last night in the market, be able to have some kind of understanding, evaluate exchanges, staking, wallets, all that kind of stuff that's like part of DeFi, right? And that's what you're there for. You're there to kind of use the cryptoverse to the best of your ability to change your financial picture, okay? And that's what you should do. Is what the institutions never let you do before. I mean, that's what I tell people. It's like, look, this is decentralized and it's individualized. You are in control of your financial health now, as opposed to having an institution do it for you. You can still, that option's still out there for you and will always be out there for you, okay? But you don't really have as much control. You're kind of paying someone to do it for you, and, you're kind of getting something in the mail, or you're checking your online account, your online banking account. You want to be in control. You want to be able to make these moves. You want to be educated enough and have exposure, a little bit of exposure to staking, a little bit of exposure to leverage, a little bit of exposure to spot in cryptocurrency, right? That's what you want to do, in terms of that, in order to influence your financial picture, because this market is only going to continue to grow, mates. All right. All right. Hope everybody has a great weekend. It is now about 5 p.m. That is me. I'm signing off. Hope everybody enjoys the weekend. Be on the lookout for LVS. Low volume Saturday, though tomorrow may not be as low volume as you may think. So make sure you get over to that free trading Discord and pop in for the updates, because I think there may be some fireworks this weekend. All right, mates.